In this video, we will break down 3 quantum computing stocks that are quietly exploding and positioning themselves to dominate one of the most important technological shifts of our lifetime. These are companies building the infrastructure for a future where computing power explodes beyond anything we can imagine. What you are about to see are businesses that sit at the intersection of physics, artificial intelligence, and next-generation computing. They are tackling problems that classical computers simply cannot solve efficiently, and the companies that get this right could reshape entire industries from drug discovery to cybersecurity to logistics. The opportunity here is not incremental, it is exponential. And the first company on this list is one of the purest ways to invest directly in that future. Let's talk about IonQ, ticker symbol IONQ. IonQ is not trying to improve computing by 10% or even 100%. This company is focused on unlocking a completely different paradigm of computation. While traditional computers rely on bits that are either 0 or 1, IonQ is building systems that use qubits, which can exist in multiple states at the same time. That single difference opens the door to solving problems that would take classical computers thousands of years. But here is where things get interesting. Not all quantum approaches are created equal. IonQ has chosen a path that many experts consider one of the most promising, and that is trapped ion technology. Instead of using superconducting circuits, IonQ uses individual ions that are suspended in electromagnetic fields and manipulated with lasers. This might sound like science fiction, but the advantage is very real. Trapped ion systems tend to have higher fidelity, meaning fewer errors, and they maintain coherence longer, which is critical when performing complex calculations. In simple terms, IonQ is building quantum systems that are more stable and more accurate than many competing approaches. That matters because quantum computing is still in its early stages, and error rates are one of the biggest challenges holding the industry back. If IonQ can continue improving accuracy while scaling its systems, it could gain a significant edge over time. Now let's step back and look at why this business actually matters in the real world. Quantum computing is not about faster laptops or better smartphones. It is about solving problems that are currently impossible. Think about optimizing global supply chains with millions of variables. Think about designing new materials at the atomic level. Think about breaking or securing encryption systems that protect trillions of dollars in digital assets. These are not niche use cases. These are foundational problems across multiple industries, and IonQ is positioning itself as a platform provider for all of them. One of the smartest moves the company has made is partnering with major cloud platforms. Instead of forcing customers to buy expensive hardware, IonQ makes its quantum computers accessible through the cloud. This lowers the barrier to entry and allows businesses, researchers, and developers to start experimenting with quantum applications today. That strategy mirrors what we saw with the early days of cloud computing. Companies that made their infrastructure accessible became the backbone of entire ecosystems. IonQ is trying to do the same thing for quantum. Now let's talk about the numbers, because this is where you start to see the early signs of traction. IonQ has been growing its revenue at a rapid pace, driven largely by increasing demand for quantum access and partnerships. The company has reported strong year-over-year growth, with bookings expanding as more organizations begin exploring quantum solutions. Bookings are especially important here because they represent future revenue that has already been contracted. In emerging industries, bookings can often be a better indicator of momentum than current revenue alone. IonQ has also been building a growing backlog, which shows that demand is not just theoretical. Customers are committing real money to experiment and build on these systems. Another key point is that IonQ operates with a relatively asset-light model compared to traditional hardware companies. By leveraging partnerships and focusing on its core technology, it can scale without the same level of capital intensity you might expect. That said, this is still an early-stage company. Profitability is not the immediate goal. The focus right now is on scaling technology, expanding partnerships, and establishing a leadership position in a market that could be worth tens of billions over the next decade. And this is where long-term investors need to think differently. If you are looking for stable earnings and predictable cash flow today, this is not that kind of stock. But if you are looking for asymmetric upside, where a relatively small position could potentially deliver outsized returns over time, IonQ starts to look very interesting. Now let's talk about the moat, because this is what separates a promising technology from a sustainable business. IonQ's moat is built on a combination of proprietary technology, intellectual property, and early mover advantage. Developing high-performance quantum systems is not something that can be easily replicated. It requires deep expertise in physics, engineering, and software. On top of that, the company is building relationships with governments, research institutions, and enterprises. These relationships can become long-term partnerships that are difficult for competitors to displace. There is also a network effect at play. As more developers build applications on IonQ's platform, the ecosystem becomes more valuable. More use cases lead to more demand, which leads to more investment, which leads to better technology. This kind of feedback loop is what you want to see in a company that is trying to define a new category. Another important factor is IonQ's roadmap. The company has been consistently improving the performance of its systems, increasing the number of qubits while maintaining high fidelity. This is critical because scaling without sacrificing accuracy is one of the biggest technical challenges in quantum computing. If IonQ can continue executing on its roadmap, it could move from experimental use cases to real-world commercial applications faster than many expect. Now let's address the elephant in the room: risk. Quantum computing is still an emerging field. There is no guarantee that IonQ's approach will ultimately win. There is no guarantee that commercial adoption will happen as quickly as investors hope. And there is always the possibility that a competing technology could leapfrog current approaches. But this is exactly why the opportunity exists. Markets tend to underprice uncertainty, especially in early-stage technologies. When the path forward is not clear, many investors stay on the sidelines. That creates opportunities for those who are willing to take a long-term view. The key is position sizing and patience. You are not betting your entire portfolio on one company. You are allocating a portion of your capital to a high-potential, high-risk opportunity that could pay off significantly if the thesis plays out. And when you look at IonQ through that lens, it starts to make a lot more sense. This is a company that is not just participating in the quantum computing space. It is actively shaping it. It has a differentiated technology approach, growing demand, strategic partnerships, and a clear vision for how quantum computing can be delivered at scale. If quantum computing becomes even a fraction of what many experts believe it could be, companies like IonQ could be among the biggest beneficiaries. And right now, we are still early. That is what makes this opportunity so compelling. Before we move on to the next stock, think about this. How often do you get the chance to invest in a technology that has the potential to redefine entire industries before it becomes mainstream? That is the kind of question that separates short-term trading from long-term investing. Because the biggest returns are rarely made by following the crowd. They are made by identifying transformative trends early and having the conviction to stay invested as the story unfolds. And IonQ is one of those stories. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The second company on this list is taking a very different path to quantum computing, and that difference might be exactly what gives it an edge in the near term. Let's talk about D-Wave Quantum, ticker symbol QBTS. While many quantum companies are still focused on building general-purpose systems that can handle a wide range of complex problems, D-Wave has taken a more specialized approach. Instead of trying to solve everything, it focuses on optimization problems, which are some of the most valuable and immediate use cases for quantum computing. And this is where things start to get practical. Optimization problems exist everywhere. Airlines need to optimize flight routes, logistics companies need to optimize delivery schedules, financial institutions need to optimize portfolios, manufacturers need to optimize production processes. These are not theoretical challenges. These are real-world problems that businesses deal with every single day. D-Wave's technology is designed specifically to tackle these types of problems more efficiently than classical computers. The company uses a method called quantum annealing. Instead of trying to perform universal quantum computations, quantum annealers are designed to find the best possible solution among a massive number of possibilities. This makes them particularly effective for optimization tasks. Now here is the key advantage. Because D-Wave is focused on a narrower set of problems, it has been able to commercialize its technology earlier than many of its competitors. While others are still in experimental stages, D-Wave already has systems that customers can use today. This is a big deal. In emerging technologies, being first to market with real applications can create a powerful advantage. It allows the company to build relationships, gather data, refine its technology, and establish credibility while others are still developing their solutions. D-Wave has been leveraging this advantage by offering its quantum systems through the cloud, similar to IonQ. Customers can access its technology without needing to invest in expensive hardware, which lowers the barrier to entry and accelerates adoption. But what really stands out is the fact that D-Wave is not just selling potential. It is delivering results. The company has been working with enterprises across industries to solve actual business problems. These are not just experiments or proofs of concept. These are practical applications where quantum technology is being integrated into real workflows. This creates a feedback loop that is incredibly valuable. Every time a customer uses D-Wave's system, the company gains insights into how its technology performs in real-world scenarios. That data can then be used to improve future systems, making them more efficient and more effective. Over time, this kind of iterative improvement can create a significant competitive advantage. Now let's talk about the numbers. D-Wave has been steadily increasing its revenue as more customers adopt its technology. Like IonQ, it is still in the early stages, so revenue levels are relatively modest compared to established tech companies. But the growth trajectory is what matters. The company has also been expanding its customer base, adding new clients while deepening relationships with existing ones. This is important because it shows that demand is not just coming from one or two large contracts. It is becoming more diversified. Another key metric to watch is bookings. D-Wave has been reporting growing bookings, which indicates that customers are committing to future use of its technology. This provides visibility into future revenue and signals confidence from clients. The company has also been focusing on improving its gross margins, which is a critical step toward long-term profitability. As usage increases and the platform scales, margins have the potential to expand significantly. But here is where the story gets even more interesting. D-Wave's approach may actually allow it to generate meaningful revenue sooner than companies focused on universal quantum computing. Because it is solving specific high-value problems today, it does not need to wait for the full realization of quantum computing's potential to start creating value. This could make it more attractive to investors who are looking for a balance between growth and near-term commercialization. Now let's talk about the moat. D-Wave's moat is built around its early mover advantage in quantum annealing, its growing base of real-world applications, and its relationships with enterprise customers. While some critics argue that quantum annealing is less powerful than gate-based quantum computing, that misses the point. D-Wave is not trying to win every category, it is trying to dominate a specific segment where it can deliver value today. And if it can continue to expand its capabilities while maintaining its lead in optimization, it could carve out a significant niche within the broader quantum computing market. There is also a strategic angle here. As businesses begin to see the benefits of quantum optimization, they may become more open to adopting other quantum solutions in the future. This could position D-Wave as a gateway into the quantum ecosystem. In other words, it is not just selling a product, it is introducing customers to a new way of solving problems. And that kind of positioning can be incredibly powerful over the long term. Now let's address the risks. Like IonQ, D-Wave operates in an emerging industry with a high level of uncertainty. There is ongoing debate about the long-term viability of different quantum approaches, including quantum annealing. There is also the challenge of scaling the technology and improving performance to meet increasing demand. And of course, there is competition. But here is the thing. D-Wave does not need to win the entire quantum computing market to be successful. It just needs to establish itself as the leader in its chosen niche. If it can do that, it could generate significant value even if other approaches dominate in different areas. This is why diversification within the quantum space can be so powerful. By investing in companies with different approaches, you are not betting on a single outcome. You are positioning yourself to benefit from multiple potential paths forward. And D-Wave represents one of those paths. It is a company that is focused, practical, and already delivering real-world solutions. It may not have the same level of hype as some other quantum players, but sometimes the most interesting opportunities are the ones that are quietly executing while others are still making promises. And that is exactly what D-Wave is doing. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. The third company on this list is not a pure-play quantum computing company. It is not struggling to generate revenue or prove its business model. This is a global technology giant with massive cash flow, dominant market positions, and one of the deepest research pipelines in the world. And that company is Alphabet, ticker symbol GOOG. At first glance, Alphabet might not seem like a quantum computing stock. Most investors think of search, advertising, YouTube, and cloud computing. But beneath the surface, Alphabet has been quietly building one of the most advanced quantum research programs in the world. And this is where things get interesting. Alphabet is approaching quantum computing from a position of strength. It does not need quantum to survive. It does not need it to justify its valuation. But if it succeeds, it could unlock an entirely new layer of growth on top of an already dominant business. That is a very powerful combination. Let's start with why Alphabet even matters in the quantum space. Quantum computing is not just about hardware. It is about integrating that hardware into software ecosystems, cloud platforms, and real-world applications. This is where Alphabet has a massive advantage. Through its cloud division, Alphabet already has the infrastructure to deliver advanced computing capabilities to businesses around the world. It has relationships with enterprises, developers, and researchers who are already using its platform. If quantum computing becomes commercially viable, Alphabet can plug it directly into its existing ecosystem. That dramatically reduces the friction of adoption. Instead of building a new customer base from scratch, Alphabet can leverage the one it already has. Now let's talk about its quantum capabilities. Alphabet has made significant progress in quantum research, including achieving milestones that demonstrate the potential of quantum systems to outperform classical computers in specific tasks. These breakthroughs are not just academic, they represent stepping stones toward practical applications. And because Alphabet has the resources to invest heavily in research and development, it can continue pushing the boundaries without the same financial constraints that smaller companies face. This is one of the biggest advantages Alphabet has. While companies like IonQ and D-Wave need to carefully manage their capital and prioritize near-term milestones, Alphabet can take a longer view. It can invest in multiple approaches, explore different technologies, and absorb setbacks without jeopardizing its core business. That flexibility is incredibly valuable in a field as uncertain as quantum computing. Now let's zoom out and look at the bigger picture. Alphabet is already one of the most dominant technology companies in the world. Its advertising business generates enormous cash flow. Its cloud division is growing rapidly. Its ecosystem spans search, video, mobile operating systems, and artificial intelligence. Quantum computing is not replacing any of that, it is adding to it. If Alphabet successfully integrates quantum capabilities into its cloud platform, it could create entirely new revenue streams. It could offer quantum as a service, allowing businesses to access advanced computing power without owning the hardware. This mirrors what we have seen with cloud computing, where companies moved from owning servers to renting computing power on demand. The difference is that quantum computing could solve problems that classical cloud infrastructure cannot handle efficiently. That opens up new markets. Now let's talk about the numbers. Alphabet generates tens of billions in revenue each quarter with strong margins and consistent growth. Its balance sheet is incredibly strong, with significant cash reserves that can be deployed into research, acquisitions, and infrastructure. This financial strength gives Alphabet a level of stability that is rare in the quantum space. While IonQ and D-Wave offer high potential upside, they also come with higher risk. Alphabet, on the other hand, provides exposure to quantum computing within a much more diversified and established business. This makes it an attractive option for investors who want to participate in the quantum trend without taking on as much volatility. But do not mistake stability for lack of opportunity. Alphabet's scale allows it to move quickly once a technology reaches a tipping point. If quantum computing starts to deliver clear commercial value, Alphabet has the ability to scale it globally in a relatively short period of time. That is a huge advantage. Now let's talk about the moat. Alphabet's moat is one of the strongest in the world. It is built on its data, its infrastructure, its brand, and its ecosystem. These are not things that competitors can easily replicate. In the context of quantum computing, this moat becomes even more powerful, because quantum is not just about building better hardware. It is about integrating that hardware into a broader ecosystem where it can create value. Alphabet already has that ecosystem. It has developers building applications. It has enterprises relying on its cloud services. It has massive datasets that can be used to train and optimize algorithms. All of these elements can work together to accelerate the adoption of quantum solutions. Now let's consider the strategic positioning. Alphabet does not need to be the first company to commercialize quantum computing. It just needs to be ready when the technology becomes viable. This is a very different strategy from companies that are racing to prove their models. Alphabet can afford to wait, observe, and then scale aggressively when the time is right. This reduces risk while preserving upside. And that is exactly what makes it such a compelling part of a quantum-focused portfolio. You are essentially getting a built-in hedge. If pure-play quantum companies struggle, Alphabet still has its core businesses driving growth. If quantum takes off, Alphabet is well-positioned to capture a significant share of that market. That kind of asymmetry is rare. Now let's bring everything together. IonQ represents a high-conviction bet on trapped ion technology and the potential for scalable, high-fidelity quantum systems. D-Wave represents a more immediate, practical approach focused on solving real-world optimization problems today. Alphabet represents a diversified, lower-risk way to gain exposure to quantum computing while benefiting from one of the strongest businesses in the world. Each of these companies offers a different angle on the same massive trend, and that is important, because the future of quantum computing is not guaranteed to follow a single path. Different technologies may succeed in different areas, different business models may emerge. By understanding the strengths and positioning of each company, you can make more informed decisions about how to allocate your capital. Now here is the question you should be asking yourself. Which of these companies has the strongest long-term advantage in your view? Is it IonQ with its focus on high-fidelity systems and scalable architecture? Is it D-Wave with its real-world applications and early commercialization? Or is it Alphabet with its massive resources and ability to integrate quantum into a global ecosystem? There is no single right answer, but thinking through that question is what separates passive investing from active decision-making. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. At the end of the day, investing is about positioning yourself for the future. Quantum computing may still be in its early stages, but the direction is clear. The demand for more powerful computing is only going to increase. The problems we need to solve are becoming more complex, and the companies that can deliver the next generation of computing power stand to benefit in a big way. The key is to stay informed, stay patient, and stay focused on the long term. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.